Hi everybody, it's Peter Schiff. It is Monday, October 26, 2009. Well, the week got off to a rather volatile start. The dollar, which initially came in trading lower on the morning, reversed and rallied as U.S. stock prices sank. The Dow finished down over 100 points on the session. You know, the last three trading sessions have been very weak for U.S. stocks. Every rally has been sold into. I think we're getting near an inflection point here where we will either regain strength and move higher, or potentially this is the beginning of a bigger correction in U.S. stocks. Also, gold was off about $16 today following the stock market down. Commodities were also down, typical pattern that we've been seeing. But, foreign stocks have been stronger than U.S. stocks. I said the last three sessions have been very weak with U.S., not necessarily overseas. The Hang Seng, for example, which was closed last night, which was Monday in Hong Kong, last week closed at a new 52-week high, up close to 2% on the day. In fact, if you look at the Hang Seng stock market, it has more than doubled since March. That's a huge move in just over 6 months of time. And other foreign stock markets, particularly in the emerging markets, have also been extremely strong, much, much stronger than the U.S. market. We'll see if today's weakness also spills over to foreign markets. But ultimately, I think the trends are still up, even if this turns into a bigger decline. I don't think the upward trend has anything to do with improving fundamentals, certainly not for the U.S. economy. In fact, stocks are going up despite the fact that the fundamentals for the economy are deteriorating, even though we might get a quarter or two or a few even of an uptick in GDP. None of that is due to a strengthening economy. It's all due to inflation and the efforts that the Federal Reserve and the government have undertaken in order to postpone the pain of this recession. But everything that they have done has exacerbated the underlying economic imbalances that made the recession necessary, and that ultimately is going to turn this into a hyperinflationary depression. Now, I wanted to share an interesting story today. I was on the phone with a mortgage broker that works for one of the major banks, one of the biggest mortgage lenders in the country, one of the firms that received the largest of the federal bailouts. So they certainly would be out of business now had it not been for bailout money by the federal government. And I happened to be on the phone with this individual because I was considering, and I don't know if I'm going to do it, actually purchasing the house that I've been renting. And don't immediately think, oh, Peter Schiff, he's buying a house. He thinks housing is bottomed or housing is a great investment. I don't. If I choose to buy this house, it has to do with the changing circumstances of my landlord and potentially circumstances personally that would make me feel like I don't want to continue moving to another house if this house was no longer on the rental market. But in any event, if I end up buying the house, it's purely a lifestyle or a choice that makes things simpler in my life, rather than any kind of, you don't read anything into it about the housing market. And first of all, I do not regard residential real estate as an investment. If you buy a house and you're going to live in that house, look at that as an expenditure. Just like buying a car, just like buying a boat, you are spending money when you buy a house. You are not investing money. I know realtors like to convince you of the opposite, but again, remember, they're trying to sell homes and they're trying to get you to overpay for homes. They are not investments, they are expenditures. If you like the house and you want to live in it and you think the price is fair, I'm not against buying it, just don't expect to make any money. Houses are money pits. They're not ATM machines. They are very expensive, as most homeowners know, between the property taxes, the insurance, the maintenance, and all the various things that can go wrong with a house, and they constantly require upkeep and money. Investments throw off a cash flow. When you have an investment, the investment pays you. You don't constantly have to feed it. But anyway, the point of this discussion is that I contacted to inquire on the rates for a 30-year fixed rate mortgage. Because certainly if I do buy this house, I made the determination I want to have a mortgage. I think if I do make any money, it won't be as a homeowner, it will be as a debtor, as inflation wipes out my debt. So I wanted a 30-year fixed rate mortgage. And the broker in question spent several minutes of his time trying to convince me that I shouldn't do that. he was really trying to work hard to sell me on the idea of an adjustable rate mortgage, particularly a 2-year adjustable rate that was tied to LIBOR. And he was basically trying to tell me, why do you want a 30-year rate? Why do you want to pay 5 5/8 when you can get 2 1/4 or 2 1/2, whatever it was, on this short-term adjustable rate that was tied to LIBOR? And he was basically telling me, he was saying, I can practically guarantee you that rates aren't going to go up. He's telling me why I have nothing to risk, I've got nothing to lose, that if I just buy it, even if rates go up, I can always refinance. He's saying that the economy is in bad shape, unemployment is going to be down, they're not going to raise rates for the next couple of years, so it's virtually a lock that I could take this adjustable rate mortgage tied to LIBOR. And I tried to ask him, I said, well, what about the risks? I said, what if there's a spike up in LIBOR and it goes up to 5% or 8%? And then he says, well, that's not going to happen. I mean, that would have to take a real, financial disaster or something. And I tried to say, well, what do you think we've just lived through? I mean, don't you think it's possible that rates can spike up? Do you really think it makes sense for you to be encouraging me to gamble that that won't happen, to pass up on the opportunity to lock in historically low interest rates, to continue to speculate that rates stay low? This is what's going on. This is an entity that was bailed out by the U.S. government that's still in business because of the U.S. government, and this is what they're trying to do. They're trying to continue the same type of practices that led to their bankruptcy in the first place. And we as American taxpayers, we're making this all possible. These types of sales practices would be going away if it wasn't for the government propping up these companies. And of course it should be obvious, if I'm getting this sales pitch, if even Peter Schiff is trying to be sold on an arm, right? This is happening all around the country. I'm sure more and more people who are buying houses, who are taking advantage of government giveaways, $8,000 tax credits, which looks like they're going to get renewed to buy houses. More and more people are relying on these gimmicks, on these temporary low interest rates to overpay for houses. And of course, this whole thing about the extension of the tax credit, the type of people who are relying on $8,000 tax credits to buy homes, obviously you're talking about relatively low-priced homes. People buying $500,000, $1 million homes, an $8,000 tax credit really doesn't mean very much relative to the price. The people for which the $8,000 is important are probably people buying $200,000 and $300,000 houses, maybe $150,000 houses, and they're probably relying on FHA financing for their 3.5% down payment, which means they're relying on the $8,000 tax credit for the entire down payment, which means these are the people who are buying homes with nothing down. And I'm sure they're being given the same type of sales pitch why they should go with an ARM rather than a fixed rate mortgage. We are encouraging the exact type of behavior that created the real estate bubble. But the government doesn't care. The banks don't care. All they care about is let's keep the music going. Let's see if we can postpone a disaster for another election cycle. Anyway, hopefully if I get to the U.S. Senate, I can change that. That's all for now. Take care, everybody.